To the markets and our floor show. Joining me now, Main Street Asset Management's Aaron Gibbs and our trader Kenny Polcari, who spent 40 years, can't believe this, 40 years as a New York Stock Exchange trader. You were there on September 11th, Kenny, but not at your office on the 55th floor of Tower 2. And I thank the world, the universe for that, Kenny.
Well, I had been there that morning, and only by the grace of God was I called to go to breakfast. Is the only reason you and I are sitting here today having this conversation.
Yeah, and it seems almost shallow to be talking about the markets. It is our job, of course, but we never forget what happened on September 11th. But Kenny, give me your thoughts on the markets right now. We do have green on the screen, but we just outlaid a whole bunch of major headlines this whole week that could move the action.
Well, I think today is more like a dead cat bounce, right? That we're bouncing off of kind of the decline we saw last week ahead of, these key numbers that you talked about, the CPI and the PPI. Certainly there's a lot going on with Apple. Tomorrow's big event, so that's creating excitement, but very specifically to Apple. But I really think that the market's just kind of churning in place right now ahead of what's expected to be, by the way, hotter numbers on the top line, right, for both CPI and PPI. But if you take out food and energy, it's supposed to be in decline, which causes a little bit of a conundrum. Is inflation increasing, or is it in fact still decreasing, right? And that's going to be the problem that the Fed's going to have to solve. My question is, if it comes in even hotter than the expectation, is the narrative still that the Fed is going to pause? And I don't think so.
Yeah, and when you talk about these individual stock names, Aaron, that are moving the action, whether it's, well, Apple up just under 1%, but Qualcomm definitely moving the NASDAQ 100. Of course, the news comes out that Apple will continue to use Qualcomm 5G modems through 2026. These two companies don't exactly love each other, but clearly Apple could not come up with any kind of imitation of the 5G modem that Qualcomm has. So you've got that stock jumping 4%, big move there. Does it take individual stocks to really move this market, or do you see outperformance in a sector or two going forward?
I think much like Kenny was saying, I think this is a bit of a dead cat bounce. And so those names that are your growthier mega cap names, any positive news that we're getting out today, this is the day for them to really get those momentum and get those bounces. But I don't see this being a full trend just because we've got so much overhead that's keeping the broader markets down. And so while we might have some good news and some good days here and there, I think we need to be really aware of what's going to happen with these CPI and PPI reports. I think China is another big issue that the consumers really have to face, is how well and quickly are they going to get through their economic struggles, and how much that is going to weigh on global growth and potentially maybe even letting the Fed ease up earlier. So I think we have a lot of information out there, whether it's U.S. credit, whether it's CPI, PPI, the Fed, that really is holding the broad market down. So take your wins where you can, where you've got these great days, but overall, I'd still be very cautious.
Yeah, the great days have not really come a lot in the past two weeks, Kenny. But right now we got the Dow up just under 100 points. Give me a sense of whether you like sort of a return to the staid trade, the august old trade, like I don't know, the aristocrats, the companies that continue to pay dividends.
Right. Well, those are the aristocrats of those companies that continue to grow their dividends consistently year in and year out for 25-year plus. And, we know them as the aristocrats or the noble names. And they're all names that Caterpillar, Johnson & Johnson, big mega cap, large cap names. Now, the Noble ETF is only up 4.5% this year, right? Because it wasn't the place to go. It wasn't sexy enough. It wasn't growth. It wasn't AI. Yet, it's starting to get noticed, right? Investors are starting a little bit anxious and nervous about what's going to happen going forward, so they're starting to plow money into some of these names. And look, Jamie Dimon came out today and said he expects 10-year yields to go to 5.5%. And if that's the case, that's not going to be a very good for stocks at all. And so I think you'll see money remaining in the stock market is going to go into those kinds of mega cap, boring but beautiful divvy payer names.
Well, listen, Jamie's brilliant, but Aaron, he has used the word hurricane, saying a hurricane's coming to the markets, and all we've kind of gotten is maybe a few rainstorms, 5% correction. Yeah, the NASDAQ had a bigger correction, maybe 8%, but nothing of a 10 or 15% move here. Does that feel like it's around the corner to you?
You know, when I look at valuations for the equity markets, I don't really see that. You know, yes, we are trading a little rich, maybe 10% rich, but certainly not 20, 30, 40%, you know, where you would consider it perhaps a hurricane. And I think we have a lot of names that are in the value side, like your managed healthcare, like some of your industrials. I like home builders as well, though they're getting a little rich. But there's still some good quality names that are doing well, increasing profits, paying dividends, and just being able to get through this economy, even in the face of higher inflation, even if the profit growth is a little slower. So I think certainly, are there risky names out there? Absolutely. I think as we're heading into higher interest rates, I think your small cap and mid caps are at very much a higher risk. And you do want to stick to somewhat more defensive in those large caps.
Okay, that makes sense. And Kenny, we didn't even bring up the IPO action this week. I mean, my investor sources are telling me that, you know, it's not the best kept secret, but that ARM will debut on Thursday. It's supposed to be pretty big, not as big as Masayoshi Son of, SoftBank would have liked. He, of course, is the one that bought this company and is hoping to spin it off here, and it's going to happen. But also Instacart. You know, Instacart's aiming for something like a $7.8 billion valuation. It was valued at $39 billion back in 2021. I mean, it's been a rough year for IPOs overall.
It's been a rough year, but the ARM one is very exciting, right? They're already talking about they'll open it. They want to keep it in that high range. But you and I will both know if there's that much demand out there, that is going to pop on the opening, right? That'll have a nice move on the opening, which, makes me think, you should really reconsider that, because you end up leaving a lot on the table if, in fact, you don't move that price up a little bit. The Instacart one, I haven't really been following. But, yes, to your point, that's going to also be an interesting IPO when it comes. I got to start to follow it a little bit better to find out kind of what they're talking about, what the demand is. Is there really a strong demand as they say there is? So I'm curious to see how that one plays out.
Apparently it's oversubscribed, something like by 10 times. But great to have you both. Aaron, Kenny, our thanks to you. And